morning. Happy 4th of July post explosions, post fireworks. It was a good day. You guys have a good 4th of July? Hopefully you did. It was a good day for our family. We had plans to go jet skis, but we didn't do that. It was an absolutely beautiful day, unfortunately, because we were going to do jet skis and we were planning on it raining all day. But it was completely cloudless. It was a beautiful day. So, good morning, Zero. Good morning. We are going to have a fantastic day today. It's going to be a beautiful day of trading. I'm excited. We had some news this morning at 8:30. We're going to pull up and see what that was. I'm just about set up on my accounts, and we will get moving. Good morning, Slade. Glad to have you this morning. Hopefully you had a good 4th of July. We got open in 5 minutes, and we're going to be going over everything here. Starting with higher time frame analysis. There's not going to be much for higher time frame analysis, to be completely honest, because our news candle made all-time highs. And so we are in a range, and as you can see from this high to this low, this is our dealing range, and it is a wick. So my first target really quickly and easily is undoubtedly either going to be one of these highs or lows. That's what it's going to be, and it's pretty obvious that it would be that. We just need to figure out which one it could be, and we're going to go over that here. I'm about set up. Perfect. All right, we are set. I do have my micros all set up, so I'll be able to pop over on that screen, show any executions for you guys. Just so this is not an alert service. I'm not an alert service. This is education based. I want to teach you to be able to do this on your own. That is what I felt from the Lord, to be able to educate individuals how to do this and do it themselves. Okay, so here we go. Data highs, data lows. We have our previous day low right here. All-time highs right here. We're going to call that all-time highs. So we're going to go one of these directions. Now, once we have our first clear move, usually it's an inversion when we have data highs and data lows. We'll take one of those inversions to the high or the low. That's typically what's going to happen. It's got to be a clear move, a decisive move. It needs to be a large-bodied candle. That's going to show us. That's really what we're going to looking for. So right away, we have this. I'm not doing anything with it. We have this right here. You can see that right there to these highs, but we're not taking it. I'm not taking it. The reason for that is we have not had open yet, and I'm not interested before that. We just came off a holiday. We just had news. Holiday. We got a weekend tomorrow. I'm not 100% sure how the market wants to react. So let's open. We got 2 minutes. We're going to open FX. FX calendar. Okay. So here is Friday's news. Friday, U.S., we have unemployment rate and non-farm employment change. So these are what we've had. 8:30. We have no more news the rest of the day. So we are open for business, and we are good to go. But I want to wait till open. I want to see how it's going to react here in about 15 seconds, and we're going to see what happens. We'll tape read this. We'll absolutely 100% tape read this. We'll see what the market wants to do here. Now, I don't see this as a trend day, so if we hit the highs, great. It's going to be a clear high for me to take to go short. I think I said that before is in reverse view. Is it reverse right now? No, it's right. This was the reverse view. That looked weird. So that should look clear. Give me a thumbs up if that looks correct. I mean, it looks correct on my screen. Let me know, Robert. All right, so now that we hit this swing high right here, you would want to move your stop to break even. We have this swing high for a break even. Okay, great. Thank you. So we're tape reading this play right now. Good morning, Robert. I'm glad you're tuning in. We're tape reading this. It was before news, and so I want to see what happens happens here. You would want to scale some. I mean, that's a nice. How high is that right now? That's 20. I would scale some if you did decide to take this. I would scale some. The ultimate target would be the data highs, but your stop should be break even, and you should be reducing size as we push higher, especially if you're on some type of eval account that has a trailing stop or a trailing bottom, because you can only lose up to $2,500 on a 50K account. And this is what could easily happen, is it could easily turn the other direction. So this is what we're watching right now. Actually, let me move this to where the entry would be. It would be right here. That was the entry. Okay. So we're watching this. We're tape reading this. What the entry was a bullish inversion. Our bullish inversion was right here. Right there. That was our entry. We're waiting to see if price wants to hit this high. Now, at this point in time, we've taken size off. We still have either one or two runners. Our stop is at break even. I honestly would hold, if you're in this trade at this point in time, I would be holding to these highs. Until we get our first retracement, our first red candle that's put in, and we break above that to make that an order block, you would want to leave your stop here. As soon as we make one of those, we can move our stop higher. It's pretty crazy that I literally sat down, turned on the stream, and then we closed right above this. I'm just not gonna take it. I'm willing to sit here, let price work itself out. If it works out, great. There'll be another setup for me, right? You gotta be able to be patient. This is what I'm talking about. Here's our down close candles. As soon as we close above this, we move our stop to this low. As soon as we close above this down close candle, this high right here, we would we'd move our stop to the swing low that would form. Okay? So we're tape reading this. I didn't get on in time, and I honestly, with it being Friday, holiday yesterday, news today, I'm gonna take it easy. We'll see what price wants to do. Technically, we should hit this. We should hit these highs. We should hit this data high. And if it doesn't, that's telling me something that I may want to keep in mind for my next trade, right? That's really what I'm looking at this. Does this actually run as it should? I mean, we have no fair value gaps. We have no swing highs. This is really the only potential target. So we really need to see what price wants to do. We want to see price move in our favor so that our next trade, we're more confident that price action is pretty clean. This is what we're looking for. So unfortunately, we would not be able to move our stop very high at this point. Good morning, BF. Glad to have you this morning. Hopefully you had a great 4th of July. It was a great day. It was a great day. I got to hang out with friends. We went fishing again. We went canoeing. What else did we do? I caught a couple weeks ago, I caught some walleye, but I caught like a 26. I mean, you can't even see on here. Let's see, about that high. I can't even put it in my screen here. It wasn't even that high. I can't even do it. It's so big. It was 24 inches. It was 2 feet. It was a 2-foot walleye. So we cut that sucker up, and we did a little fish fry yesterday. Watched some fireworks. Kids took some fireworks as well. So it was a good time. So we're tape reading this for those that are just joining. We're watching this right here. This is a tape read for me. I'm not in this trade. We're watching. We want to see price run above this high. As soon as we run above these highs, I'm moving my stop back. I'm moving my stop to this low right here. But we're sitting at break even. You should have taken some profits somewhere along this push higher. That's really what you should have done. Our first target would have been about right here because we have these equal highs sitting right here. And you're still holding your position, a smaller position, 1, 2 contracts, whether they're minis or micros. And you're holding to this data high, which would be 57 handles. We're watching this right here. That is right now what we're watching, and we want that to close above. We want a candle to close above that line. I don't even know if I can move my stop on this example. Yeah, I can't. It doesn't let me take it any higher. Looking at this 30-second here, we ran down to this last fair value gap before this move, and then we inversed another fair value gap right here. We wicked this high. I do not like that signature in price. Because we wicked this high, I honestly would move my stop to, let's do this low right here. Oops. I would move my stop to the body's low right there. That's where I'd put my stop loss right here. So we're still pushing. Let's go back to the 1 minute. And we should really run for these highs right here. Now, we should not see any resistance. There should be no resistance. We should run to this high. Now, if you have multiple contracts, I would sell one there, because there's times where price will not finish. When you get that close, it's just like, yep, I'm gonna take some size off. We're waiting for this push. But because we turned there, I would now move my stop loss. I would put it at the consequent encroachment of this down close candle right here. That's where I would be putting it, right there. So that's where the stop loss would be. At the consequent encroachment, we already ran this high, okay? We don't want it, sometimes it does not hit, so we just want to bring our stop loss up. We're still holding. I'm not in this trade. I have not got in this trade on another screen. This is a complete tape read for your guys' enjoyment. All right, we should get it right here. We should push right through this. Deborah, yes, absolutely way too late to jump in. I'm just saying that. I would not be jumping in right now. I mean, if we were jumping in, I would be in this. Okay? Right now, what we're watching is this inversion right here. Okay? I don't want this to break. If this breaks, if we go below this, I might stop. I might change my stop loss. This is our last point of resist or last point of support right here for price to push higher. Okay? That's what we're watching. I'm on, this is NQ. So everything, it's right on futures trading. This is the Nasdaq. Disregard the NQM. We're on NQU 2024. That is what we're on right now. Still holding this. We look at this where we closed. On the 1 minute, we closed on, or we opened on the consequent encroachment. I like that signature in price. There's still hope that we run these highs. Okay? There's still hope that we run those highs. Caveman, price will do that. When we have a really, this was a signature. This is one of the models that I've learned is when you have data high, when you have your first clear inversion broken, it should run towards these. And that's exactly what you did. So if you could weather a retracement like this, you should be in profit. All right, so we have 51 seconds here. I'm not sure what's going to happen. We have our stop loss right here. So we for sure are booking 33 handles. For sure are booking 33 handles. We want to see if we're going to get 57 by tapping these highs here. Okay. We've taken profit at least 1, 2, 3 different times, depending on how many contracts you had. If you only had one contract, your play would have been only 11 handles because this would have been your first target right here. Okay. We had these equal highs sitting right here. Okay. That is what we were looking for. I like where we, if we close above this box, that's a nice signature in price. I'm tempted to chase right now just for a push, but I will not do it because I've been burned so many times. There we go. Stop loss is hit. All right. So there is your play. Like I said, there's times, guys, that price just does this where it'll have an SMT. So this could be absolutely an SMT if we're looking at the indices. I'm not looking at anything right now. If you appreciated that tape read, you like that. I never took the trade, but if you like that, hit the like button. I would greatly, greatly appreciate that, guys. Zero cost to you guys, but it definitely helps me on my end. So thank you. All right, so we'll take this off screen. Now, because we didn't, let's talk about this here real quick. Because we did not hit this high, I have no entry. I have no interest in anything going on in here. I want it to hit the high. Well, I don't know if that's good or bad. And good morning. Hopefully you had a good 4th of July. Actually, I keep forgetting. Not everybody's in the States. So yesterday was a holiday for me. I guess it's a holiday for all you if you trade and you weren't able to trade. So I guess that's considered a holiday, right? Now, some mistakes, here's a mistake I have made, is because we don't hit these highs, I'll refuse to take an obvious setup to the downside, and I'll miss a nice move. So depending on what it looks like will determine if I want to take it or not. So did we close above that? No, that looks very, very interesting here. Let's see. And we closed below that. But I'm hesitant on taking this because we didn't hit that, and this is a little small for me. And this comes over time tape reading. I want it more obvious. It is somewhat obvious because we found support here, but I don't want to. You would have taken some profit right there. So that trade would have worked. Your stop would be to break even, but I didn't take that. Okay, so this right here is what it would have been. Okay, so that would have been right there. That would have been your target. Here's what I do like, okay? So if we find some support there, I like this. I want to play that. Now, this is a breaker. This is a breaker, but because we didn't hit those highs, I want to see this fail. This is where you have to be very careful on your decisions. Very careful on your decisions because technically we didn't hit liquidity here. People will take this breaker to the downside and be destroyed, or it works out and then price can do whatever it wants, but we're looking for a specific signature in price, and taking this without these data highs being hit is not a signature in price I'm interested in. I'm looking for that inversion. Yes. I'm looking for the inversion here. I want to see this broken, and I want to see this inversion taken. Stop loss would be moved to break even right there. Okay? That's what we're looking for. We still have 33 seconds. No close, no trade, staying out. I like the way this candle looks on the 5-minute. That's very bullish. So I'm gonna remove this breaker. I think you guys got the point why I wanted to see it run through that. Okay? Because we didn't hit these highs. Still 27 seconds left. We want to make sure ES did not hit the high. I think ES did not hit the highs, so we're good. We're good there. 14 seconds. If you try to front run this, sometimes it will pull back down really fast, so you got to be careful. See how it did that? If you took that long, that was not a close. You see how it was up here? It looks like it's going to close. Well, I'm going to get in it before it starts running. I've done that so many freaking times. And then it closes below, and then it runs the other direction. You have to be very, very careful on that. We do not want it to hit this level before we get in. If it does, it's a no trade.
Order filled.
All right, so it ran against me immediately as I got in, okay? I took that entry and it ran against me immediately. That's okay. I'm in this trade. There's my position right there. Okay. I'm going back to the other screen. I just want to show you that I am in this, but this is where I'm watching the price. Okay. So stop will be break even. Will be moved to break even right here. Okay. Oh, that sucks. We need the 2 minute to close right here. Okay, so we have a 2 minute right here that is not closed. So that makes my trade idea not as valuable. But we got in, we watched the trade play out. Okay. So we're going back to the 1 minute here. Stop will be moved to break even as soon as we hit this high right here. Okay, I got my stop sitting below, just waiting to put that at my break even. Okay, so we are not out of this trade unless it closes below that. It makes a horrible stop loss, but that's the rules right now. I really want it to hit there so I can move my stop to break even, and I'm okay if I get stopped out. There we go. I am at break even right now. We do not, if it stops me out, it stops me out. But my stop is now at break even. And I'm waiting for the data high. So I'm targeting that high. Entry was here. Target is there. Stop loss is there. So that's what it's looking like right now, folks. Okay. We have our stop loss. Break even. It's a free trade for me. I'm going to let this sucker run. And I wanted to see... I'm going to do a manual. I'm going to actually put a limit order sitting a handle or two above the highs. Okay. And I'll get ready to drag it down in case it doesn't hit. I don't like that, but let's see it push. If it stops me out, it stops me out. We're in a macro time as well, between 9:45 and 10:15. If we close any lower, I'll probably just take some profits. We should see it push. If it doesn't, then I want to get out. So actually, my stop, I'm putting below. Let's see. Where do I want my stop? Here. I want it to run right now. There we go. Come on. Hit it for me. And we'll be done for the day. Come on. There it is. Bam! Doesn't that feel good? Okay. I did a limit exit here. Sometimes I'll do a manual exit because we could push and I could get another 10 handles. I didn't. It was already 23 handles. It was 23 handle win. I'm happy with that. That's really what I wanted to walk away with, was a nice win. And we got that. I mean, I'm up. Let's see. On that one trade, I did just micros on there. 1, 2, 3, 4, 5, 6, 7. $1,500. I'll take $1,500 and walk away. So I'm done. I will not be trading anymore. When I get a solid win like that, you have to just be able to walk away. I mean, I'm happy with that. 20 handles, one trade, 100%. 100%. So we're going to close that. We should be flat and all. Okay. There we go. All right. So at this point, here's what we got to look at. Oh, that's why. Okay. Now you could have held. I only do right now the size that I do, guys. I'm trading a drawdown account. Thanks, JP. Dunsworth. Thanks, Matt. How many micros I did? What was it? I just exited out of that. What was it? It was 4 micros on each account. 4 micros on each account. And eventually I'm building that back up. I'm building that up. I had a loss. If you were here, was it last Friday? I had a loss. I've made all of that back. I will be increasing my size again to probably 5, 6, 7 micros. My goal is to work up all the way to 1 mini contract. But what am I? My question for you guys is why am I working my way up there, and why am I not just going straight to a micro or straight to a mini contract on all those accounts? I need you to answer this question. Why am I not just going right back to a mini contract after I've made up my losses? Why not? Well, what could be the reason why I'm not? The answer to this is extremely, extremely helpful. Can someone click the like button again for me? Yeah, thanks, JP. I appreciate that. That means a lot. Hopefully, this content is helpful. Matt, building up the account. That is one answer. Yes, it is all for me. It's 100% psychology. Why am I trading multiple accounts instead of just one account with a whole bunch? One, I don't have a big enough account for it. But two, it's the psychological side. When you look at, when I showed you my charts, what do you see on my charts? You see the ticks. You see the ticks. You don't see the dollar amount gained. Okay, what do I mean by that? If for those that are not on TradingView, so let me show you. I'm on a paper account right now. If I was to get in short right here, you see a tick symbol right here. The number of ticks, I'm up or down, right? I could change this to show the dollar amount I'm up or down. Which one induces a bigger emotional response? Dollars. I want to keep my emotions out of this as much as possible. It is already extremely difficult to manage emotions through this whole process. So I reduce that as much as I can. And one of those is to focus on the number of ticks that I'm trying to win instead of looking at the dollar amount. Okay, so right now this is just 32 ticks down, 24 ticks down. What happens? Let me show you what I mean by this, guys. Let's see. Trading. Orders. Where is it? Here it is. Look at this. Okay. What if I change this to money? Now I'm looking at money. Look at that dollars up and down. That just, if you don't think this messes with you, either you got balls of steel or you've gone through a lot, or you're lying to yourself. Like, seeing this like creates such an emotional response to me. Like, look at that. Maybe your stop loss should be up here, but because you're seeing these numbers, you're freaking out, right? You have, so ticks is one way that I deal with my emotions. And so the size is the same thing. If I don't want my emotions to be involved at all. So I want to get to a point where I feel confident just taking a trade. If I lose a trade with four micros, not a big deal. I'll make it back. Well, as I work my way up, I still have to deal with every single one of those emotions every time I increase in size. So I guess you could, to some degree, say, well, why don't you just skip micros 6, 7, 8, 9 and just go to one mini and deal with that? I absolutely could do that. I'm just not. But I want to do this slowly and progressively. And honestly, 4 micros on 8 accounts, $1,500. I mean, guys, that's I'm happy with that. I'm happy. Is that Miley? Is that how you say that? Nice to see you. Nice to have you here. Fair Value Gap ICT Trader. Good morning. I'm glad you're here. I think I saw you put a comment in earlier. Glad you're here. Inner Trader, how you doing, man? It's good to see you. All right, so what are we doing now? I'm just chatting here. If you have questions, put them in here. Miley, well, I'm glad to have you here, Miley. Thanks for joining us. If you weren't here earlier, we just took a 20 handle win just a few minutes ago, and we also took a 50 handle win on a tape read that I did not take, but we did a 50 handle tape read session looking for these data highs. We didn't hit these data high when we had this entry here. So when we had this entry here, that was A+ setup. Get 20 handles out of that sucker, and now we're out, done for the day. At this point, what are we waiting for? We're waiting for price to want to give a clear change in state of delivery, right? So let's draw a Fibonacci tool. That's a potential target right there, okay? 1 standard deviation from this high to this low is called a manipulation leg. When we go the other direction, we want to see it roughly hit about here. It's not a hard set rule, but once we hit this, I would start looking to see if price wants to reverse. Okay? I understand that it's probably hard to come up with questions about price action when nothing's happening and we just had a great trade. Did anybody take that? Was anybody, give me a 1 if you took that inversion with me. It would have been right here, right? It would have been right here. Let me know if you guys took that play right there. Give me a thumbs up. Give me a 1 for yes, 2 for no. 1 for yes, 2 for no. Deborah, thank you. I really appreciate that desire to support the channel. At this point, it's 100% free right now. So I'm glad you're here. It's my goal is to build an audience right now. Once I have, let's say, 250, 500 followers, where I can't answer individual questions, the chat's running too fast, that's when I will begin putting up a paywall, most likely. And more than likely, that will be on a Discord of some kind. Dang it. No problem, Zero. It's a good trade. If you did, as long as, and I said this in the last stream, as long as you follow your rules, that's what matters. Following your rules is more important than taking a potential trade somebody else is pointing out. Because if it's not your style of trading, if it's not your model, you don't take it. All right, look at this. This is a nice displacing candle. The question is, do we continue to displace? Do we find some support right here? This was the previous all-time highs. Okay. So let's see what happens with this candle right here. We have some action. Trying to pass an eval. How much more, Deborah, how much more do you have for your eval? What do you got? And then we'll see if we can find a potential setup for you to hit those numbers. Right? I called this out, guys, right here. This was previous all-time highs. I wanted to see its support here, because I don't know if we're exactly done. We could go lower, but let's see. That's really tough, T-Man. Really tough. That would be really tough to see that happen because we've had so much happen today or this week. We've had 4 days of news. We had a holiday in there as well, so really tough. Deborah, 2 contracts today. Have you taken a trade yet today? $1,100. Do you need, and the next question is, do you have to pass it today? If you are doing 2 contracts, you need to get a minimum of 25 handles to win. You need 25 handles to win. So that's really what you got to target is 25 handles. Let's see if we can find something for you. Here's this is a breaker, but it's moving a little quick at the moment. Now, even though you might want to try to pass it today, the downside to doing that is you force trades that may not be good setups. That's the downside of trying to force a passing an eval in one day. I mean, as you can, if you watched my video, I put one where I failed a 50K eval account. I was up like $1,600, and then I started getting loosey goosey and took trades I shouldn't have traded, and ended up failing the account. All right, so right here's one. I want to see what happens with this right here. Okay, so if we can get back up to, if we close this and we get right here, I would probably look at taking a short. I'm saying this as if right now we have a potential down move. If I'm looking for something, I'm not saying it's an A plus setup, but if we can get into this fair value gap, this would be worth taking before we hit these equal lows right here. We got equal lows right there. So I would be looking at trying to find a short entry because we have these data lows down here. Okay, so data lows, looking to take that. If you're looking for trying to pass an eval, okay. So right now I'm on paper account. I'm done in my live accounts, so we'll be done there. We have an OB right here. This is an OB, okay. We did create an inversion. I really wanted it to touch that inversion. See where this fair value gap was? So we have an inversion right here. We have this fair value gap here. I would want to see it tag in here, and I would look for a potential short. The only risk that you really have to watch is coming up into this fair value gap right there. That's the risk. So you need to decide, is that risk worth me taking? Is it worth it? Okay. These are the potential. This is potential resistance. Also, it's a potential area for price to be attracted to, as this is also resistance, but also a point of attraction as well. Okay. That's what I'd be looking for. This is me if I'm trading. Yeah, so this is for sure a downside move. As soon as we hit these equal lows, I'd take off some size, depending on where you are, if you're already in this. Because we did technically inverse this fair value gap. We don't have to hit this, but that's really what I wanted. I wanted it to reach a little bit higher for a better entry. That's the reason. You could still have taken this right on the close, and you would have been, let's see, this is what it would look like. If you were to do that, it's an 18 handle stop loss. That's why I didn't want it. There's 22 handles, and it would have given you a better entry to hit 22. So if you're looking for an entry, I would say this is your entry right somewhere around there, somewhere around 2,485, because then these equal lows will give you 20 handle move or 25 handle move with your contracts. You are 100% true there, Masato. That is something worth considering. Is we have an SMT on ES. So ES hit. Did it hit the data lows? It did not. It did not hit the data lows though. We do have an SMT, but we did not hit the data lows on ES. All right, so let's see where I want to see where this candle closes. I want to see how that, I want to see what happens here. This is a paper account. I don't like how big that is. Isn't that crazy? It's just so big. I'm not saying you should be in this. I'm looking at the idea I have. It's a paper account for me. There's zero risk on the table. if you're one of the one putting risk on the table, you have to decide if it's risk you are willing to take. This is a paper. This is paper only. A close above this would invalidate the trade. So stop sitting up here, but really your close is if we close above this red box. And based on that aggression, I would want to get out. And now if you're thinking, well, hey, this is an inversion right here for a long, we're not delivering from anything. So this is a B minus. I'm not interested in something like that because we're not redelivering off of anything. There's still a higher probability we go lower. We just may be reaching up into this breaker or this fair value gap sitting up here, right? And you have to decide, are you willing to hold that risk and still be wrong, potentially, right? That's the thing, is you need to be, you're putting risk on the table that you're willing to accept. But here's, okay, so we still respected this fair value gap. So this is looking really nice. Now, if we can close below this fair value gap right here, I think we got a winner. As soon as ES hits these data lows, we are probably not going to want to look at, we need to really consider taking risk off the table. We filled that. We technically did run equal lows on ES. These were equal lows that we ran. So 1 minute inverse right here. So not the best sign as far as what we may do. Not the best sign. Now, if you remember earlier, I mentioned that we could come up and hit this level, and we could come up into this level here. That's the risk that we really are risking, is it heavy enough to not want to move any higher? That's all right, Deborah. You do you. 100%. Be very picky about your setups. Be very picky. Because we had two reasons it could have gone higher. This one and this one. We have a mitigation block. Let's see. So technically this is technically the breaker right there. We just wicked into this 1 minute here. See what the 2 minute looks like. This is the 3M. $4M. Back to 2M. Okay, so here's back to the 1M. Now, here is my most, okay, so we're respecting this breaker right here. If we inverse this right here, if we close, we do something like this and we close above it, we will run these highs. To me, that is more high probable than anything else we've seen. I'm just not interested in highs at this point because we're not redelivering from anything, and ES also didn't hit its lows. So is it probable that we close above this? Not in my mind, not from my perspective, but we could. And if we do, that would be a signature in price that tells me we're running for these highs. So we'd do something like that. I think I'm just reading that, Deborah. Hey, it is, okay, here's a question. Do you have a model you use? Do you have a clear strategy you use for your entries? Because if the answer is no, then that's why you haven't jumped in anything. You haven't had a model that you've cut your teeth on, that you've seen play out, 75% of the time, to have that confidence to actually take something. I've seen this countless number of times right here. Countless number of times I've seen this. When we break above this, right before we hit a high, and we get an aggressive candle in the other direction, I will go long every time. If you're still learning, Deborah, then do not take any trades until do not take any major trades until you actually have a model. And if I'm with what I know, I would choose the inversion model. That's what I would choose. Okay? It's I move my stop to break even all the time. And so your risk is a lot less in most respects. And it's usually great confirmation that prices move in the other direction. So this is the trade we took. All right, so I mentioned that we were going to we had the risk of coming up into this fair value gap. What did we respect? For the most part, we've respected this breaker. Okay, so this is the breaker's high and the breaker's low right here. And the candles respected the discount portion of this breaker candle. So it was in the lower half of that breaker candle. That right there, that alone in that push lower would have given, let's just say you got in on the close into it. Let's say it was right there. We would have done, would we have been stopped out at 10 handles? You would have been stopped out at 10 handles because of that wick. So let's just say you didn't, you got in here. Because I have a hard stop at 10 handles. You could have got 22 handles on just the initial push of that breaker. Doesn't mean it's actually going lower, but typically when you have a nice clear breaker like this, you will see a reaction the other way. It may be very short-lived, but you'll see a reaction where you can get 10, 15 handles out of it very easily. Because what it will do is if you think, oh man, it's going to run now, it will retrace and then it could run the other direction. So, and that's if we're in a bullish market, and we are in a bullish market. So if you're trying to go short, you want to take profits quickly because we're at all-time highs. Price has a higher probability of wanting to go higher on a higher time frame. On short term, we may actually we'll see some retracements that you can actually make some money on. Based on all of this action, though, I'm looking at this right here. Right now, this is what I'm looking for. I want to see this. A close above Maybe we retest it, and then we run these highs. To me, that's based on this reaction at this breaker. That's what I'm interested in. No, so when I'm talking about handles, I'm talking about the multiple of 4 ticks combined. 4 ticks equals 1 handle. So we're talking about going from, let's say, 20,520 to 20,521. That is 1 handle. A tick is every 25 cents. So if I was to zoom in really close, you'll see it. All right, so every 25 cents is a tick. Every dollar move is a handle or a point. Yeah, I use it interchangeably. I would use only handles if when I got in for shorts or longs, it showed me only handles and not ticks. But since I see handles and ticks, I have to go back and forth between them. All right, so equal lows here. I want to see these. I want to see it grabbed first, and then I would like to see it push higher. It could leave these, but I really don't want that because then I have in the back of my mind, are we going to come back, break these highs, and have it short-lived and run back these equal lows? So I would like these equal lows to first be ran. The other reason, going back to your question, Deborah, on how you can support, the reason I'll eventually going into a Discord is, one, it's private. I'll be able to be more clear with executions. And then number 2, there's no lag. There's no lag or very minimal lag. So you're not watching this 30 seconds after I said it in a market where we need to watch real time. So it's really hard on YouTube to have real education. And so my primary goal is to educate people. And it's still hard to educate somebody when you're trying to teach somebody how to read price action. It's really hard to teach somebody in real time what to look for when it's already happened. I want to be in the moment for somebody to really understand, hey, we just had these equal lows. We want to see that hit here. And then, especially if it moves really, really fast, so it has to be quick. When would you consider being wrong and it reverse? Great question. When I have a clear model to the downside. So right now, let me ask this, Crypto Hustle. Right now, I'm playing both sides of the market, if you haven't noticed. So I think I have a short and a long that I was looking at. My first short was here, was this breaker, which technically is invalid because we've closed above it. But we're in this fair value gap and we've been respecting the lower side. So it still tells me we could see lower price action. So when you're asking this question, when do I change it? I'm constantly evaluating the market. I'm constantly reading price action. Look at this candle right here. Or excuse me, look at this box right here. The consequent encroachment is the middle of this candle's low and this candle's high, which is leaving this fair value gap. We are doing price action on the lower half of it. This is bearish, overall bearish price action that says we might have some resistance here. Now, I don't have a model to go short right here, so I'm not going short. The only model that I see right now is right here, which is a break above this, and then I would take it. If I had a model, which we do, it's just not as valid anymore, of a breaker, a bearish breaker, I would look at taking that as well. So I'm reading price action just as it's happening. And the reason why I'm not looking at higher time frame right now, crypto, is we're at all-time highs. If I look left, there's nothing to my left on the 5-minute. There's nothing to the left really on the 15-minute for me to be clear. We do have this low resistance liquidity and a fair value gap down here, but there's really not anything that I can, that I use as part of my analysis for an entry. Okay, so if we go back down to the 5-minute, we just inverse this 5-minute candle right here. Not just, but we did inverse this. This would be bullish. This is bullish price action on a higher time frame. Yes, it's just a 5-minute, but we're bullish there. Okay, so if I'm looking at a short, probably a close below the 5-minute to close below this 5-minute would tell me we may run for these lows. Mark, thanks, man. That means a lot. Thank you so much. I enjoy teaching. I really appreciate it. Most ICT traders are trying to trade patterns when you have to become a master at reading price action. You have to be able to read the market. You have to read order flow. You got to get a higher time frame analysis to figure out where we're going to go. Okay, so right here, we're breaking out of this consolidation. I like this. I would be interesting. I'll do a paper long in 30 seconds if we close above this. So it would look something like this. I would be looking at targeting those highs. My stop loss would be right here. It still is a 15 handle stop loss. So you need to say, what is the max stop loss I'm willing to take? Let's say it's a 10 handle stop loss. Okay, if that's the case, then I need to wait for price to come back down. Let's say there, where my stop loss is below this inversion. All right, there's our close above. Now you need to decide what risk you're willing to take. If it's just 10 handles, then your entry would be somewhere around here. Okay, that is what you're looking at. What kind of risk are you willing to take? Maybe you're like, I'm willing to just take this whole thing. Okay, that's you, man. Do it. I don't like losing more than 15 handles. So this would be my stop loss. A close below this would also be verification of closing the trade. Okay? So I'm going to do it based on what the model is a close above. This is where my entry would be. Okay? That's the entry. Stop loss is a close below this fair value gap sitting right here on the 1 minute. I'm not taking this because I'm done for the day, but this is the model. Okay? We inverse this. We are right now at 935. 935 is in between macros. So we could see some lackadaisical price action that does not show clear aggression to these highs. Now it could respect this the entire time, but that's where you are going to be sitting in drawdown, and you have a lot of emotions of sitting in drawdown. So when you are doing multiple contracts, should you double your stop loss? No. 100%. Your stop loss is even smaller. Your stop loss is even smaller with that. So you got to manage, you got to decide what amount of dollars you're willing to risk. Okay, so it looks like we're going to be closing below this. So this trade obviously didn't work out, and not every inversion works out. You will have failed inversions. That's just what happens. It sucks that it's not 100% win rate. But we have this low resistance liquidity now. Let's see. Let's just wait 16 seconds to see if we actually close below it. Because I have closed trades before early, and then it wicks back up into there, and then it runs in my direction. So a full close. Yep. That is not a win. All right. So what did we run? We ran these equal lows that were sitting right there. It wouldn't surprise me if now we just continue to consolidate. It ran these losses. Remember how I said that? I completely forgot about that. I forgot about those. So looking at price action right now, would you consider it being rejected from a bullish order block? I have difficulty reading those sometimes. So only if the order block is in line with a higher time frame analysis, or bearish order block, sure, which it would be like these two candles right here, right? These two candles were closed below. This is now this could be considered a bearish order block. If our higher time frame analysis shows us that the market wants to continue in that direction, 100%. If the market looks like it's bullish, the answer is no. This is why you just can't be trading patterns. It's not pattern based. It is order flow based. You have to be trading based on order flow. Now, even though we have this put in, I'm seeing consolidation here. Even though we saw these aggressive candles, guess what we didn't do? We didn't continue lower, and look where we closed. We closed right at these equal lows, and now we potentially are coming back into this consolidation. So we need something clearer in my mind for us to consider taking a trade, right? This failed. Okay, I don't like that anymore. We've already hit all-time highs. This should have played out, honestly, 100%. This should have played out, and it didn't from that inversion. That tells me one of two things. Either price action is becoming not as clear, it's becoming choppy, it's not respecting its PD arrays, or number two, we are moving into a bearish market. It doesn't give me a clear answer, but now I have two things that I can consider. All right, if we are moving into a bearish market or a bearish price action, do I see signatures in price to additionally confirm that that's what we're going to do, right? We need to answer that question. Now, this is interesting right here. Didn't close. It did not close. And that was so fast, you guys probably aren't even hearing me say that yet. That's the worst part about freaking YouTube right now. The reason why this became, I'm interested in that is, what did we do? We ran equal lows and then we reversed. That is a signature and price I really, really like. That was this signature and price right down here that I took. I took that for the all-time highs. Okay? That's a nice signature and price that I play quite often. Okay? But going back to what I was saying, now that we had a disrespect of this candle right here, I need to figure out, is price action crappy now, or is the market shifting to bearish order flow? For those two things, what do you need? You need more information. So you're going to have to sit and wait for more information. You have to wait for more order flow to really get a better picture on what price wants to do. Now, what did we get here? We had a picture of a signature and price, still with order flow in our direction, that made this attractive to me. Okay, but now that we've made these highs, this trade is not a setup anymore. Okay, it's not a setup. And sometimes that will happen. Okay, so here's something I've seen. Hang on a second. Guys, I'm going to be on mute for a second. I have somebody calling me about my lawn. I apologize. All right, I'm still on this, but I want to talk about this. You would have, if we came in, we didn't have a trade idea on this. So we closed above this, and we're still wanting to see if price wants to hit these highs or these lows. All right, sorry about that, folks. Thanks for your patience with me. I had a lawn care guy that I called last week, and I'm finally getting a call back. Okay, so let's talk about what we just fake breakout, right? We're wanted to see if this was going to act as support, because anytime we hit all-time highs, we have to assume price wants to move higher. It doesn't have to reverse right away. It could, but we really have to be very careful on going short. ICT talks about not trying to call when the highs are. He honestly says start playing your swing lows and going long in these, because it could easily continue higher. So we grab the liquidity here. We just inversed this. I want to see if price is going to continue higher, because this is technically an inversion. Now, why wouldn't I want to take this? Is because of how high we already are, right? We've already pushed so high that I want to be very careful. It's very hard to read in all-time highs. Playing all-time high markets is difficult. It honestly is, because sometimes you think, oh, it shouldn't go any higher, then it goes higher. Sometimes you're like, oh, it has to go lower, and then it goes higher. It's tough. So thanks for being patient with me on that phone call. Got that addressed. And here's what I see. If you look at the 5-minute time frame, we just have this OB, this order block that we've closed above here. I want to see if that acts as support. And so far, we've touched it 1, 2, 3, 4, 5, 6 different times. So that is a sign in my book that we may see further bullish order flow, but I don't see any entries. The only entry that I saw was this one right here, and it failed immediately. We didn't take it, but it failed immediately. So that tells me, honestly, price action is crappy right now. I would be not doing anything more than likely until the afternoon session. That's what this is telling me. It's like, I don't want to mess around in this. You need to be able to recognize if price is going to go in our favor, it follows our rules. We grab liquidity here. We turn and very quickly run the other direction. We inverse a fair value gap, and then we immediately violate it. That's something you want to stay out of. Honestly, you should be looking for shorts, but we're at all-time highs. So this is what happens. So the shorts that you do want to take, you want to make sure that they're legit. They're high probability. So we've seen this fair value gap find support multiple times. If it inverts this, we probably are going to run lower. Now, why can't we go short on this inversion? Because we have another fair value gap down here. So when you have two fair value gaps in a leg, this low to this high, that's a price leg. We cannot go short when we have another fair value gap below it. You can go short if we inverse this one to these lows, but that's already low in discount from this leg. Okay, so we're looking for single fair value gap legs. That's why this one, I drew out this one right here, because if you look above it, there's not a fair value gap at all. So technically, price closing above this should have, in a decent market, in a decent price action, should have ran these highs, but didn't. Okay, so tells me it's price action I don't want to mess around with. Price action I don't want to be in. Now I'm seeing, I would love for us to see, a sell side So look, see this as a market maker sell model right now. That's what I would really like to see. I'm seeing the evidence of it, but we really need more confirmation. The first confirmation we need is we need a full body close above this candle. So below this candle right here. So we got 26 seconds. I'm going to remove this 5-minute order block. For a change in state of delivery, we got to close below that line. So if we close below this line, we have a change in state of delivery, and then we're going to go to a lower time frame, and we're going to see if we have a potential setup. So 5-minute change in state of delivery. So that did happen. We did not close below this fair value gap, so we on the lower time frame, but we do have a breaker sitting right here. This is our breaker sitting right here. Okay, we have no fair value gap. So the only thing you can really look at is this breaker bar. This is the breaker bar right here that you would be looking at as far as where am I putting my stop losses and where am I putting, what risk am I dealing with here? Because we have no fair value gaps to the upside. It could be a low resistance liquidity run, so you have to answer the question, if I'm going to use this as a breaker, where am I going to put my stop loss? Where am I going to limit my risk exposure? Okay. So more than likely, we're running from that breaker. We came back up into it. It closed below it and closed below this fair value gap. Even though we do not take that short because of the inversion, we can take that short because of the breaker. Now, two scenarios could play out right here in my mind, or two scenarios that I'm considering. We find support here, come back up to the breaker, and then continue lower. That's option one. Option two is we pretend this inversion, this fair value gap doesn't even exist, and we just close right below it immediately, and then we run for these lows right here. That's option two. I'm less likely on option two. I think we might actually find some, come back up here, and then continue lower. Now, when you see a candle like this, the first thing you should be saying to yourself is, let's wait till it closes to see where, if we are going to respect this breaker, or if we are going to just pretend it didn't even exist there and it wants to run this low resistance liquidity, right? So retail traders will see this as a trend line. They'll say, oh, I'm going to go short right here because it's in a trend line going down. Price, the market will want to run these more often than not because they know retail traders are putting their stops here. So it's going to grab that liquidity and then run the other direction. I want to see where this closes in relation to this breaker to see if it wants to respect it. Okay, I would consider that mostly a respecting the breaker. Look at the body. Look where the body is on this breaker. I can't. It's messing with me there. Okay, there's the body of the breaker. We closed below the body. This is a respection of the breaker. I would still look at shorts at this point. And then at the point in time you feel like I'm willing to put risk on the table, you put your stop loss in the appropriate spot, and then you're targeting, you have your targets, okay? I like this as a short. I really do. Now I'm looking at when can I take risk off the table. As soon as I hit this low, I'm taking some profit, or I'm taking some profit and I'm for sure moving my stop to break even. I'm always looking at how quickly can I move my stop to break even. You could do it right now. You could do it right now and put your stop to break even to prevent it running the other direction, because we've seen some wonky price action. But you just risk being stopped out more. That's okay. At least stopped out is zero than, you know, a $200, $400 loss, whatever it may be. So you need to consider, where am I, at what point in time am I moving my stop to break even? And when you see these retracements, you can't get freaked out by them. As long as it's respecting order flow and it's respecting your PD arrays, that's when you are deciding, that's when you're preventing yourself from getting out. As long as it's respecting your PD arrays. And right now, my main PD array is this breaker, and it's respecting this breaker for the most part. If it violates this breaker and it shows me it wants to move the other direction, I'm getting out at that point. But right now, order flow is telling me it wants to move lower, right? It's respecting, the bodies are respecting the low of this breaker bar. Now, if it closes above it, it doesn't mean, if it closes above this breaker bar, it doesn't mean that the trade's invalid. It means I better be paying close attention to see what price is really doing right here. Again, we're respecting it again. Another candle respected, but we're seeing a couple green candles in a row. So it wouldn't surprise me if we get maybe a wick and it comes back down. But if we get a full body up here, I might be looking at getting out. This is what risk on the table looks like. You have to think through all these types of scenarios. And that would have been my stop. Let's say I want to see what this candle does in 16 seconds. And then I'm going to share a thought on this. Yeah, no, the price action is really crappy. Price action is really crappy. However, it's still giving us opportunities, and that's what I'm going to talk about. Okay, so this trade is invalid. This trade is invalid. We even closed above the breaker, this yellow box here, right? We closed above that. Now, here's the thing I want you to see, is when we're at all-time highs and you're going the other direction, you have to be very, very quick. I talked about moving your stop to break even as quickly as possible. What happened? Your strongest move on a PD array is the very first one. Your strongest move on a PD array is the very first exposure to that PD array. What do I mean by that? Okay, let's talk about that. I said this was our breaker, right? This was our breaker. Our first exposure was in this candle. Our first exposure back into that breaker was this candle. And what did it do after we hit this candle? We had the biggest reaction to it. Okay? The next time we came back up into it, we had another reaction lower, but not as big as the first one. We came back up into it again and had hardly any reaction to it. We still are respecting our rules, so we have to be holding it. We can move our risk and remove our risk as much as we want. But this is the value of being able to identify a trade and being able to be nimble, being in and out quickly, because your biggest opportunity will be on the first exposure to it. I say that tongue in cheek because I've seen trades will come back up to it and then run 50 points in my direction. But when we're against order flow and we're at all-time highs, you may get the reaction in your direction. But if you're like, well, I'm going to hold for this big move, and we are in bullish price action, overall bullish price action, I mean, we have to be very careful that it doesn't want to run against us and run higher. So it's always better to, if you are like, well, I don't ever want to play against the trend. Okay, if that's the case, then you need to have a model that allows you to play in these trends. And for me, it would be a no trade day. I would not be trading because I need major retracements. We've already hit all-time highs. How many times? How many times did we hit it? I don't even know. Oh, right here. So we hit it 1, 2, 3. We hit all-time highs 3 different times. It's all-time highs are hard to trade. It's just the truth. We had our setup here. We got, how many handles did we get if we take that on the first exposure? If we take that on the first exposure right here. Oops, wrong one. If we took that on the first exposure, stop loss would have been 10 handles. And we would have gotten 13 handles out of that into this fair value gap. So, as you can tell, we're reading order flow. There's all-time highs. Bam, right there. We just hit it again. Overall, this is just price action that I'm not a fan of, especially at all-time highs. It's not clear. We had multiple instances where we should have ran the other direction. This one was a legit setup that if I didn't have a trade yet, I would have taken this trade and I would have lost. Or I would have taken some size off here and then got stopped out for break even, one or the other. Because this is a legit setup. We grabbed all-time highs. We were in a macro time of 11 o'clock macro, and I would have looked at going short right here. I would have taken that trade if I was not personally done trading. This is why when you have your win, be done and walk away. Because there's a high probability when price starts doing its crazy stuff that price action becomes, you start giving back profits. I'm going to call that a day here, guys. I'm going to call that a day. I will be back here Monday morning. Let me just look. Do we have any news next week? Do we got any news on next Monday? Next Monday is... there is no red folder news. So it's going to be potentially a choppy day on Monday. I will be trading. We will be doing some live trading. So come join us. Hang out with us. If you haven't already liked the video, guys, and you like the commentary, I would appreciate it. Thank you so much for your support and hanging out with me. I enjoy it. So we will see you guys next week. Have a blessed day.